Robert Kiyosaki, which most of you guys would probably remember as the Rich Dad Poor Dad author, recently came out in a tweet, says the Federal Reserve is dead and he recommends you to buy Bitcoin, gold, and silver. Very interesting. He's been putting out a lot of videos lately, but man, to really just come out and call the Federal Reserve is dead, it looks like he is headhunting right now. Bitcoin roaring toward exponential bull run, says Willy Woo. So we'll dive into this. We have a couple other interesting things to dive into as well. So the return of the Bitcoin retail investor and why that's a good thing. So basically showing how retail investors could eat up half of the Bitcoin into 2024. And this article points to how this is basically a good thing so that institutions aren't owning up all of the Bitcoin, that retail demand is most likely going to be there, which I also think is a good thing. And we also have Bitcoin Dormant Supply metric mirrors 2016 to run up to 20K Bitcoin price. So basically the last time there was this much dormant Bitcoin, Bitcoin off exchanges just sitting a wall, it's not moving, we had a price run up to 20K. Which is really weird because we have all this dormant Bitcoin, but as of right now, it looks like Bitcoin's going to head lower. We don't know exactly what's going to happen. This market is so volatile. I definitely think this market is manipulated. So I wouldn't be surprised if, everyone thinks we're going down and then we pop up. At this point, I have no expectations and whatever happens, happens. With that said, if you guys could like the video, thank you so much. I appreciate any support you choose to give to the channel. And let's start right here. Let's start with Robert Kiyosaki. So according to Robert Kiyosaki, an American entrepreneur and author, he says the quote-unquote Federal Reserve is dead. He cited the increase in so-called zombie companies and their respective debts, purportedly at $900 billion. Kiyosaki writes that the debt zombies will pass $1.6 trillion next year, putting risk on the Federal Reserve. And guys, zombie companies is a very big problem. Zombie companies contributed a lot to the collapse of Japan's economy back in the day. So Robert Kiyosaki tweets this. He says, Fed is dead. Loans to zombie CEOs cannot be paid back. In 2020, zombies owed $900 billion with declining income. By 2021, zombie debt to pass $1.6 trillion. Got gold, silver, or Bitcoin? Accept whatever comes to you woven in the tapestry of your destiny. Marcus Aurelius, take care. Liking the Marcus Aurelius tweet or citing right there. So to combat this trend alongside a potential debt crisis and money printing, Kiyosaki has effectively prescribed Bitcoin, silver, and gold. He has mentioned those assets to his over 1 million followers ad nauseum over recent months. The Rich Dad Poor Dad author says that those assets are real money, while the fiat money printed by Federal Reserve is fake. I wouldn't even call it fiat money. I would call it fiat currency because it's what it is. It's a worthless money, should not even be tied into that. He wrote in May that BTC could hit 75,000 in the next 3 years, while the two precious metals also perform well. Kiyosaki's poignant comments on the economy and its relation to gold and Bitcoin comes as the precious metal has rallied. As the time of this article's writing, gold trades for $1,770, which is 15% higher than its price at the start of 2020, and it's also close to a new all-time high against the US dollar, with the last one set after the 2018 recession. Now here's from Paul Tudor Jones. He said in a research note titled The Great Monetary Inflation that Bitcoin is the fastest horse in the race. This was made in reference to the asset's 21 million coin supply cap, while other asset classes don't have that benefit, even gold. And that's true, guys. Gold does not have a fixed cap because there's more in the ground that we can dig up, and we don't really know what's in the ground, how much gold is actually in the ground. And there's places we haven't dug yet, right? So there could be gold in places that we don't even know. There could be so much gold in the earth. And I'm not saying this I own gold first and foremost, so don't think I'm bashing on gold. But I mean, there could be a pocket of gold somewhere that is, a large supply that could push the price down. It could make it less scarce is all I'm saying. Again, not bashing on gold. I own gold. I also own silver. I think they're great hedges. Also touting this sentiment is Bloomberg's Mike McGlone, a senior commodity strategist. He wrote in a recent report that with Bitcoin trading increasingly like gold, the latter rallying could boost the former. So he says, increasing companionship with gold is a Bitcoin price tailwind in our view. At the highest for longest 52-week correlation in beta ever versus the metal, the firstborn crypto should continue to advance for reasons similar to gold, fueled by unprecedented global central bank easing. Guys, out of all the research that I'm doing, the main catalyst that I am seeing, the main reason for people of, I guess you could say, the mainstream people who didn't really talk about Bitcoin, the catalyst that I'm seeing, the catalyst that they're saying for why is Bitcoin going to hit 100,000, and the main common denominator between all the people making these statements is because they are saying that the Fed just keeps printing money. That is the main catalyst here for Bitcoin going to a much higher price, starting a new bull run. That is what I keep seeing. That seems to be the main reasoning. And yeah, with Bitcoin at a fixed rate supply and the Federal Reserve keeping on printing money, once we start to lose that value, and I think you will, I think with all the stimulus checks going out and all the money printing that we're doing, I mean, the Federal Reserve has basically said that they will do whatever it takes to keep the economy afloat during COVID-19. That's what they said. They'll do whatever it takes to make sure we stay afloat during COVID-19. And with that said, I think we will eventually feel the effects. You know, when you print up billions of dollars, you don't necessarily feel it tomorrow. You don't necessarily feel it next week. But, you know, in maybe a year from now, you're just going to see prices going up. You're going to feel the hurt from it. Your stimulus check, if we keep getting stimulus checks, you're going to realize that the buying power of that stimulus check isn't that great. And then people are going to demand bigger stimulus checks. And then once you start making those bigger stimulus checks, it's more money being printed. And then a year from then, you'll need even bigger stimulus checks because the buying power is even more down. And that could be the catalyst for why Bitcoin gets propelled. If you guys like daily cryptocurrency videos, news, market and market sentiment, things like that, make sure you subscribe to the Digital Investor community. If you guys could give this video a like, that would be amazing. With that said, before we hop into Willy Woo and what he has to say, let's go over a couple prices in our Fear and Greed Index. So Bitcoin right now is at 9,085. We have Ethereum at 223. XRP is at 17 cents. We have an 8-cent Cardano, Chainlink at 449, Tezos at 238. Vechain is at 0.0086, so not much movement out of Vechain after that news yesterday, but it's already had a massive run up, so I mean, what more could you really expect? Basic attention token at 25 cents, and we're still trading in our range. We're trading sideways, and we're at 41 on the Fear and Greed Index. I think if Bitcoin really starts to fall off the cliff here, I think we'll see this get into fear pretty quickly. I think, and depending on how hard of a crash we have, I think this could be a very big shakeout. I just have this weird feeling that we might have a massive shakeout coming, or we also might rip to the upside, but I don't know. It's something in my gut tells me we're going to have possibly one of the largest shakeouts ever. I think there's going to be some news coming out or something, some beer disease news coming out. Who knows? World War III. I mean, anything can happen. As you guys know, earlier this year, we even had the U.S. government come out and say that they have UFO documentation. They said UFOs are real. So at this point, I mean, what can you not expect? So let's jump into Willy Woo and what he has to say. So in a viral tweet, Woo tells his 132,000 Twitter followers that the king cryptocurrency was primed to ignite a bullish onslaught in March until COVID-19 killed the party. But the on-chain analyst's new model, which signals the possible start of a new bull cycle, suggests that Bitcoin may begin another bull run in July. So he says, this is a new model I'm working on. It picks the start of exponential bull runs. Bitcoin was setting up for a bullish run until the COVID white swan killed the party. This model suggests we are close to another bullish run, maybe a month more to go. So Wu says the bull market delay brought by the pandemic will turn out to be a welcome development for the largest cryptocurrency. He says the long base building process is serving as rocket fuel for Bitcoin. He says the longer this bull market takes to wind up, the higher the peak price. A long sideways accumulation band is ultimately a good thing. Other analysts are not betting on a big Bitcoin turnaround anytime soon. As the King coin struggles to stay above psychological support at 9,000, trader Nebraskan Gooner believes Bitcoin has already printed a local top and is headed for more pain in the near term. As the cryptocurrency follows a tried and tested sell-off script known as the Wyckoff distribution schematic. And I've seen some people posting this Wyckoff distribution schematic for the current place that we are in. And I've seen it play out in the past on Bitcoin. So will it play out again? I guess we'll see. You guys know what I'm thinking. I'm thinking there's about to be a shakeout. And it's just kind of a feeling I have. And if we do get shaken out, I'm ready to accumulate. I know what levels I want to buy at. And if not, that's fine. I've already been dollar cost averaging into this market for years at this point. So meanwhile, trader Pentoshi tells his 15,000 Twitter followers that Bitcoin's uptrend since March is now over as the most dominant crypto flashes multiple bearish signals. Bitcoin trend is your friend. It's been sideways for 58 days. See uptrend stopped. Made a macro lower high at the 3-year downtrend line. Now making micro lower highs. The new trend is there for you to spot. So guys, will we just come down to here? Will we break through? Maybe catch some support here? We have some people, like if you listen to Tone Vase, he's saying we're going all the way down to, like 1500 or something like that. Let me know what you guys think. 3 scenarios, right? I want to know your 3 scenarios. I want you to pick which of 3 scenarios that you think is going to happen. Will we break up from here and start our bull run? Will we drop down and maybe hit like 6,000, 7,000, basically find some support, create a lower high? Or will we go ahead and capitulate all the way down to like $1,000? Just let me know in the comments what you think, and let's just see what majority of people are thinking. So check the comments either now or after this video, and let everybody know what you think. So let's move on. First mover, the return of the Bitcoin retail investor. We're not going to go over this whole article. We're just going to go over what I found important. So a report out last week from derivatives exchange ZUBR argues retail investors are not just here to stay. They could end up absorbing more than half of Bitcoin's daily fresh supply in as little as 4 years. So by the time the next reward halving era comes around in 2024, retail could potentially account for eating up over 50% of the physical supply, the report predicts. Using data from analytics from Chainalysis, the number of wallets accounts holding small whole balances anywhere between 1 to 10 Bitcoin, sizes that suggest retail rather than institutional, had risen rapidly. So basically, if you're holding 1 to 10 Bitcoins, you're considered a retail investor rather than an institutional investor. Since Bitcoin hit its all-time high at the end of 2017, the number of retail wallet holders more than doubled, reaching 215,000 by the start of June 2020. In total, these entities hold over 500,000 Bitcoin, which is valued about $4.6 billion, and is up over 100,000 since the start of 2019. And here's the chart to go with that. So when you look at something like that, right, we look at something where people are saying retail is getting more into it. And then let's check out this, guys. So the Bitcoin Dormant Supply metric mirrors 2016. These are kind of like 2 big coinciding variables for me, which is also a good thing, because if more retail traders, or mainly retail investors, are holding Bitcoin and they continue to quote unquote eat up the market share, that's good, because that means it's not just institutions buying all of this and then retail traders are all, FOMOing in at the top. And I think the more, in my opinion, the more people, the more average Joes like me and you that can own Bitcoin and can secure some type of financial security for our future, the better. Why let these big monstrous companies that already have so much power continue to get a power hold? I think it's very important that we all secure our financial futures. So 61% of the Bitcoin supply has stayed in the same place for a year or more. The only time that happened was before its all-time highs. So despite a hectic year for Bitcoin price action, the data shows that over 61% of the supply remained dormant through highs and lows. This is a record, U.S. Exchange Kraken Business Dev Director Dan Held added. Glassnode noted that early 2016 likewise recorded similar behavior among holders. The implication is that there is a reluctance to trade or sell, and a belief that it will be more profitable to save. The last time we saw this amount of Bitcoin that had not moved in over a year was in early 2016, preceding Bitcoin's bull run to 20K. And guys, I think I showed you guys an article maybe a week ago that miners are not selling their Bitcoin, they're just holding it. I don't know if they're still doing that, but that was something that came out where they were showing some data that miners are not selling their Bitcoin, which I thought was extremely interesting. The phenomena of investment cycles in Bitcoin is often referred to as hodl waves. As Cointelegraph reported in May, data has long shown parallels with 2016. By comparison, last year's run to 14,000 saw dormant supply levels reach 56%. Unlike in 2016, however, there was no cooling off period between the dormant supply spike and the bull run. The road to 2017's record only really began more than a latency period of around a year. Various other indicators have pointed to a saving mentality prevailing in Bitcoin. Exchange reserves are at 13-month lows, while signs of accumulation are visible in wallets with both small and whale-sized balances. Earlier in June, Glassnode showed that 90% of days were spent accumulating in the first half of 2020. Since May, block subsidy halving, meanwhile, the number of whales, entities with a balance of 1,000 or more, has increased by over 2%. So basically, as across the board, we're seeing accumulation. A holder, nonetheless, still only needs a balance of 1 Bitcoin to be in the top 3% of all Bitcoin addresses. Because if you hold a Bitcoin right now, you're in the top 3% of all Bitcoin addresses. And as the price of Bitcoin rises and people start to sell their Bitcoin, meaning the amount of Bitcoin in their wallet is decreasing, and more people are buying Bitcoin, right? All the new retail investors and all new investors, period, as they're buying Bitcoin, and it's harder to accumulate a whole Bitcoin. Let's say when Bitcoin's at like 50,000, they're probably going to be trying to go for like 0.1 of a Bitcoin. So you will go up higher than 3% if you're holding your Bitcoin. With other people selling their positions and new people buying in who can't accumulate a whole Bitcoin, you will rise from 3%. You could possibly get to 2, 1%. I mean, we'll really see what happens. And I think the longer that you hold your Bitcoin, the higher up in those, the lower those percentages will go, which would be a good thing for you, your Bitcoin position, and probably your net worth. With that said, if you enjoyed the video, make sure you drop it a like. And if you're still around and you like daily cryptocurrency news, consider subscribing and join the digital investor community where you get a video like this daily. I hope you guys all have a great day, and I will see you all tomorrow.